right here, we picked up 5 ticks on this one and 5 more on this one. And over here, it was a questionable YBR short because the cycle was going up pretty steep, but if you took it, it worked out pretty well. And let's see in here. This is during the break. There was a nice long right there on crude during the break. And a YBR short right here. Well, right here too. During the break. Okay. Now the ES, we traded a lot on the ES today too. Now, let's go all the way back to the beginning. And I had 21 trades this morning. That's more than I normally have. Okay, our first trade here on the ES, we only picked up 1 tick. We should have had more, but it moved around really fast. And I moved my stop to break even +1, and it took me out there. The next one right over here, we picked up 11 ticks, put us at +12. Then 1 tick put us at +13. Then this might have been the 1 tick here. I don't know about that. But the next trade that we took, we picked up 8 ticks. Let's find it. See, there were YBR trades in here that were working out really well. But yeah, here the next one we picked up. We picked up 8 ticks to get to +21. We picked up another 8 ticks. We picked up 1 right here. Oh, that was a break even. Sorry. Picked up another 8 ticks here to put us at +29. And right here, we picked up 2 ticks to put us at +31. And that was where we stopped trading the ES on the morning. Now there was a YBR trade there. A little bit of one here. You would have had to suffer through a little bit of chop. We had a break even trade there. And there's got to be something in this mess right here. There we go. Right there was long. Right there was long. And then we get into the break. Now during the break, it got really choppy in here. And, you know, if the YBR trades, they hit like this, and then it just chops around and keeps going back and forth, and you're not getting any follow through. You know, just take the break even and wait it out. There was a long trade here off the BBC. A short trade here. And that was not a valid long trade there. And that was it on the ES. So we were +31 on the ES today. Again, I say it every day. If you are not a CFRN member and trading futures with us, I don't know why. All right. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the first day of October 2020. We made 4 ticks in the euro, 10 ticks in crude, 27 ticks in gold, and 31 ticks on the ES. That put us at +782.50. +782.50. Today, took us 7 minutes and 2 trades to get to the goal for the day. At that point, we're up 112.50, and we took a total of 21 trades this morning. So on the month now, we're up 782.50. That's over 1 trading day, averaging $782.50 per trading day. Today's my 157th consecutive day of getting the goal. And on the year now, we're at 76,239. That's over 182 trading days, averaging $418 per contract per trading day. Now, again, I'm going to say 157 days in a row of getting my goal. And on most days, I got more than my goal. Like, this is almost 8 times my goal. And, you know, we had 21 days last month. So if I stopped at getting my goal at $100 per contract on every day, right? We had 20 days. It would have been $2,000. But I have to trade for 2 hours, so I kept trading, and that was the result from last month. But either way, the idea is to bump up the contracts, not bump up the trades. Okay. Now, if you are not part of the CFRN family, and you want to become part of the CFRN family, go to eminifutures.trading.com. We've made it very affordable for you. Get in there and become a part of the family. You know, at least to start out with, you can get in there and do that, and then you can upgrade to a lifetime license later if you want to. And that's all you have to do, really. Okay. All right. That's it. With that, we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, you are ready.
And I was actually, I tinkered around with a couple things. Unfortunately, I don't know which thing did the thing, but I was able to see your chart and hear your voice. At first, I could just see your chart on YouTube.
On YouTube.
And
okay.
then I touched some things, and then I could hear your voice. So
Good.
Good. They do have pretty good support. They're pretty patient anyway. At least they've been patient with me. God bless them. So
well, that's a good thing.
Yeah. So I get back in touch with them today and try to figure out. There's still some bumps in the road, but better than we were. All right. Recap of the recap.
Today it took 7 minutes and 2 trades to get to 112.50.
I'm sorry, say that again. I was touching another button.
7 minutes and 2 trades to get to 112.50.
That's a good bingo. Good job.
Thank you.
Okay, let me grab the charts.
Right. Okay. All right, I can see your screen.
That would be them. Okay, great. That's
Excellent.
the chart. Okay. All right, guys. I already pulled this up once, but I'll just go over it again real quick. So far this week, week 113, we've had 44 total Logic 247 alerts issued, 4 never triggered, 40 actionable, 2 stopped out. That's 5% of actionable alerts stopped out this week so far. But that's not an average number. Our typical number is 20%. Now, let me bring up the Concierge Trade Alerts, which did get out as they were supposed to on time last night. 6:15 p.m. Here we go. Now, as I was explaining earlier, the Logic 247 alerts, those pop up in your Telegram channel and our private Telegram alert channel as opportunity presents itself. Okay? The concierge alerts are based on historic price action, so we're taking a little bigger look at the market, and these numbers become sort of guidelines for the session. In fact, best thing to do is when this report comes out, is you go to your charts, you draw a line at 3367, draw a line at 3327. Now, typically, there will be Logic 247 alerts in between these two numbers, but once you get to this number, 3367 on the long side, you want to be long at 3367 as an example, or only thinking about long trades at that number and above, and 3327, that's the short side. If price makes it 227, you either want to be short or start thinking about just looking for short trades, because the market has at that point revealed its sentiment for the session, if you will. So, yeah, Jane. So Joan, good. Joan's here. She says YouTube's up. Yay. Okay, good. I'm glad it's working for you. Now I just got to make sure I put some super glue on it so it stays that way. All right. Now, those alerts that I showed you initially, the initial ones that we went over, the Logic 247, okay, I'm going to scroll through those real quick just to show you what that looks like as they're coming out in the channel. The recap for last week in logic was 60 total alerts, 12 never triggered, 48 actionable, 3 stopped out, 6% of actionable alerts stopped out. Again, that was a better than normal week. The average is 20%, not 6. And so Sunday night, when the Globex markets open at 6 p.m. Eastern, that's when our week begins. And when the logic alert channel opens for business, it stays open from 6 p.m. Sunday evening till 5 p.m. Friday afternoon. So the first alert coming out of the box was a long on the S&P, and we had a long on the Dow. B stands for buy. T is initial target. Potential resistance, that would be like target number 2. And then the final trade to target on all alerts is the weekly trading zone above on a long, or the weekly trading zone below on a short. So this was a long on the Russell. Okay. And then we have a long on the NQ, short on crude, short on gold, short on silver. Now when you see the old red X, that's the ones that got stopped out. That one was in Q, this one was silver. Now we're long the S&P here, long the Dow, long the NQ. This crude never triggered. This is the long on gold. I goofed this one up. We just had to wipe it out. I got the numbers all wrong. I'm human. All right, here's a hedge on the 6B. We had the British pound was in a position where it could go either way. So we set up a long side trade and a short side trade. And some people go, well, wait a minute. That's not fair. You can't do that. I can't. Well, I mean, you can't have your cake and eat it too. You can't be long and short. No. But you can be one or the other. And sometimes the market will put itself in a position where I don't know what's going to happen next. In fact, no one knows what's going to happen next. Not even the gurus with the billboards that tell you they've been to the mountaintop and they've seen the truth and now they can speak truth and blah, blah. Here's the deal. In Genesis, God chose not to give Adam the ability to change the past or to know the future. And those two things are inextricably linked for eternity. So, important to note, the next time you come across one of these seductive websites that tells you they know it all, well, I'm sure they know a lot. They just don't know with certainty what's going to happen next. There is no indicator, there is no oscillator. Not now, nor will there ever be, that can predict the future with 100% accuracy. What you can know, though, once you learn how to read a chart, kind of like a newspaper, once you learn to speak the language of candlesticks, you can know with certainty what the next high probability move is on any market, on any time frame. And what we teach, the methodology, the strategy, the indicators we use, it's all fluid across all markets and all time frames. Now, if you've pigeonholed yourself as, well, you know, I'm just an S&P guy. Okay, there's nothing wrong with that. Or I'm a crude guy. That's okay too. What you'll learn as you begin to learn our strategy is that we trade every one of the futures markets exactly the same. We use the same time frames. We use the same indicators. As we flow from, and in the mornings in the live training room, you see Michael, he goes from one chart to the next, treats them all the same. Now, people will say, Well, you can't really do that because, well, different markets have different personalities. Well, I don't even argue that point about the personality. All we're looking for is a high probability, low risk trade opportunity based on basic principles upon which the markets operate. And those principles are the same for the S&P as they are for the Dow, as they are for the Russell, as they are for lean hogs. Okay? All right, so anyway, we had a potential short, potential long, and I messed it up because I got the numbers wrong on the short side. But we did trigger on the long side. Okay. Then we got the 6E, the euro, and Swiss franc, Mexican peso, Canadian dollar. And now we're up to the 29th. This has all been this week since Sunday night, 6 p.m. Eastern. There's the long on the S&P. There's a hedge on the S&P. Okay, one of those same kind of situations. There's a long, it ran and hit its target. The short ran and hit its target. And then here's a short on crude. Short on the Dow. Short SL, short on the NQ. Which brings us up to yesterday, the 30th. Long on the S&P. Long on the Dow. Long on gold. Long on crude. Short on the Russell. Short on the S&P. And this was there was a previous long gold, and so here was a hedge against that long. This was to be short at 1891. This one dropped $160 per contract traded. This one dropped $487.50 per contract traded. At the time Valerie does the recap, she notes up top what the current swing high or swing low is, and we only track that initial trigger and move. Now, it may come back and trigger multiple times. It may pull back and then, go much higher or much lower. But we can't at some point we have to kind of close the books on that trade. So she makes a notation as to the swing high or the swing low and whatever value there was attached to one contract. Now here's a short on silver. That one was worth $975 per contract traded. Now when you think about our current special, and as Michael said, with this whole pandemic and this economic crunch and people who don't know if their jobs are coming back, people are scrambling. They're trying to figure out what they're going to do with the rest of their life. Trading is not the answer for everyone. It just isn't, because it requires a certain kind of personality, which you may or may not have. I don't know. Some of you I know very well, and I know your personality, but I'm speaking to those in the audience that I don't know. So maybe you've always wanted to try trading, but you didn't have the time, or it's just too expensive. The training itself was more than you could afford. So our passport, okay, which is everything that we offer, all the indicators, all the alerts, the logic, the concierge, 2 hours of live training every morning, a Thursday night workshop, lots of good conversation and trader talk in our discussion group. The lifetime passport's $5,000, $49.97 to be exact. But if you go to eminifutures.com, you'll see what we've done. We have made this affordable for everyone. $97 a week, You can cancel anytime. $97 a week until you come to the conclusion that this is for me. Finally, after all the time and treasure I've spent, I got something that's working for me. You can always buy the passport, the lifetime version. Okay? So you go 97 a week for as long as you want. Then when you're ready, then you can buy the lifetime passport. So we're doing our best. We want to help as many people as we can. And while you're learning how to trade, as Michael is teaching you each day in the room, and we also offer unlimited one-on-one mentoring, while Michael's teaching you how the strategy works, I'm slinging out these alerts that are actual live real-time alerts as they unfold. All you have to do, and you don't have to race to your computer. Typically, when an alert comes out in the logic channel, you'll have anywhere from 15 minutes to sometimes a few hours, sometimes even more, to get to your computer, get your thinking cap on, and start trading. Okay? Now, are we done with this list yet? So that's silver, 975. We covered that one. This was a short on the Dow. That was good for $445 per contract traded at the time of the recap. Okay? If you continue to track it, it may have produced more. I don't know, but in the very beginning of Logic 247, I tried to track multiple triggers because you're going to see how these important prices in important areas really are almost always tested. We're going to go through the charts here in a second. You'll see that. So short on the Dow. This was a long on the S&P. It was worth $137.50 per contract traded. Here's a long on the Dow. That one was good for $435 per contract traded. And again, B is buy, T is initial target, potential resistance. You can think of that as target number 2, target number 3, target number 4, final trade to target. That's that weekly trading zone. Okay, $435 per contract traded. This at our special offer pricing right now. I mean, this one trade will cover you for a month. Now, even though you're coming in at a very low price, very low barrier to entry, we still want you to follow the 2420 blueprint just the same way all of our lifetime members follow. And that is, before you start trading real money in the market, you need to understand the methodology. You need to understand the strategy. Okay? So we want you to trade in your demo account or in your simulator until you've put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you do that, our blueprint will then give you the green light to go live with one contract. You're going to trade one contract until you increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. That's a big day because your first contract was funded from your savings. But the second contract is being funded with profit you earned in the market. And going forward, each time the blueprint tells you, okay, you've been at 2 contracts now, so many days, it's time to add number 3. It'll tell you when it's time to add number 4, number 5, number 10. But you're always adding, increasing your trade size with profit you earned in the market, not your savings. If the blueprint's telling you you need to, or it's time to add another contract, number one, there's never any pressure to increase your trade size. That's up to you. But if the blueprint says it's time to add another contract, if you don't have profit available in your account to fund that additional contract, then you don't add another contract. You book a one-on-one mentoring session so we can get together and go through your trades, see what's going on and help you figure out why the blueprint's saying it's time to add a contract, and and that's not a walk of shame or a sign of any kind of weakness or you blew it. No, it's running your business like a business. See, unfortunately, too many people run their trading business like a casino. Well, actually, if every trader ran their business like the casino, then everyone would do very well because, well, you've driven down the strip probably. You've seen all the tall buildings and the bright lights. The house, the casino, they do quite well. But Joe from Idaho, somehow it doesn't always seem to work out for him. How does that saying go? What you win in Vegas stays in Vegas. So my point here is that the more you treat this like a business, the more it will behave like a business. If you approach it with a gambling mentality, well, those are the kind of the results that you're going to get. Now, the reason that the casinos come out on top, nothing magical about it. It's all mathematical. In other words, these casinos have a set of rules by which all their games must abide. Whether no matter what table or machine you're at, they being the house, the odds are in their favor. They have stacked the deck right in front of you. Now, if you try doing something funny, well, they'll throw you out real quick. But their whole business is built on, hey, if we're going to be a successful business, if we want to make our shareholders happy, if we're going to show a profit at the end of the year, well, we certainly can't just hope we get lucky. No, we have to stack the deck. We have to come up with a set of rules where the gambler is able to win, from time to time. But over the long haul, over the larger sample size, the casino always comes out ahead. That's by design. That's on purpose. Well, imagine if you wrote your business plan and your trading plan from the casino's mindset versus the gambler's mindset. In other words, you find a definable edge. Because as soon as you walk in the door of that casino, they have the edge because of the rules. So when you're writing, and that's part of the 24/20 blueprint, you write your business plan, you write your trading plan, and as it walks you through that process, you're able to structure this so that the odds are in your favor. Now, I don't like that word odds because it is kind of a gambling term. What you're looking for is a set of rules that define high probability, low risk trade setups. Mark Douglas, who wrote Trading in the Zone, which if you haven't read, you must read. If you're going to be a trader, it really is that important. He said all you need is a definable edge and the mindset, the self-discipline to actually trade the plan that you've created. And he wasn't picky about what definable edge. He says it can be, anything you find that gives you a definable edge. And definable is defined by, he said you need a minimum sample size of 20 trades before you can make any kind of a judgment about a methodology, a strategy, or a set of indicators. Well, this is alert number 5,342. Okay, we started at number 1. 5,342. That's how many individual alerts that we've put out. And as I told you earlier, what we've averaged over the 113 weeks is 20% being stopped out on average each week. Here's a long on the Russell. That one was worth $305 per contract traded. This was a long on the NQ, $194 per contract traded. These never triggered. Price never got to 11,372 here or 1888 here. Here is a long on Crude, 120 bucks. Here's a long on the Russell, 140 bucks. Here's a long on silver, now only 75 bucks. Okay, but there you have it. Okay, those are every one of the Logic 247 alerts for the week. So now this might make a little more sense. You just saw 44 alerts, 40 were actionable because 4 never triggered, and 2 of them got stopped out. Okay, so better than normal week in that regard. Now let me go through these Concierge Trade Alerts real quick, and when Dr. Tom shows up, whatever we don't get finished by the time he shows, then we will finish them after we speak to Dr. Tom. I just got to find my list again. There it is. There it is. Now, if you didn't get that screenshot and you want it, have a go at it. Okay. On the chart, daily chart. Start there real quick. This chart's getting a little messy. About time to clean it up again. We did this the other day. Now, yesterday I said that we needed to see a candle open and close above the daily BBC. That green line that you see on the chart, that's our BBC, which simply stands for Bull Bear Cross. When price crosses above the green line, we're bullish, looking for higher prices. And then once price gets below the green line, we're bearish, looking for lower prices. And as you can see, that's what you're looking at here. When I go to the 30-minute chart, or if I went to a 5-minute or a 1-minute, I would address everything exactly the same. Here, price pulls back to the BBC. When that happens, when we're bullish and we pull back to the BBC, we expect it to be good support, and we continue to expect higher prices. Okay. Once price gets below the BBC and pulls away, you see this was the first candle that opened and closed below the BBC. So then we pull up to the BBC, and just as we expected support over here, we expect resistance over here. And that resistance sent us down to, we had drawn a little window of opportunity. So it came down, filled the window. Okay, boop, boop. You did it a second time, you did it a third time. And then we pulled back to the BBC. Now, this low right here, if you look over here, you see these lows? It's an area, okay? Always, if the more you learn to think about things as an area, the less frustrated you'll be. I'll try to explain that in more detail as we go along. So we pulled up to the BBC. Now, from here, the next high probability move is what happened right here. Picture perfect. This time, though, the BBC may not be holding the pullback. If we close green today, and at this point it certainly looks like we will, we're off the highs of the day, but We're closing in on this area. Now, you've got a bearish cross right here, which is actually today's swing high. We always know to anticipate resistance at those areas where the bearish cross happened previously gives us resistance today. If we can get through this area, now we got to deal with that swing high. If we can get past that swing high, we've got a real nice window of opportunity, and that right there is the all-time historic high. If buyers fail to hold this momentum up here and we start to drop, then our next major support below is where this bullish cross took place. Okay. Now, a lot has to happen before that can happen, but we'll walk you through it right here every day. Okay, let's go to the 30-minute S&P chart. Okay. All right. Last night's Concierge Trade Alert. Consider being a long 33.67. That out of the way. Hold on now. Okay. S&P 500 Emini Futures. This is a 30-minute chart. So remember I said you draw two lines in the sand? So the first line you would have drawn last night when the alerts came out was 33.67. Okay. 33.67. Now I mentioned that important prices in important areas, 33.67, are almost always tested. So on this initial trigger, we ran up to 33.72.75. So from 67 to 72. That's 5 points, and the S&P pays $5 per point. S&P pays $50 per point. 5 points, $50 a point. So this would be $250. $250 per contract traded. But the night is young. What did I do? Tell me. Let me fix this. Drive me nuts if I don't. Probably just walk there. Okay. $250 per contract traded. But think more about the 5 points than about the dollar involved for the moment. Because as Michael said earlier, our idea of solving this market equation is not chasing more points. Well, I got 10 points today, or 20 points today, or 50 points today, or whatever the case might be. The idea is to become consistent at taking just a few points a day out of the market. Most of our traders set their goal, as it's outlined in the blueprint, at 2 points in the S&P or the equivalent thereof. Now, 2 points in the S&P pays you $100 per contract traded, which I know won't quite pay your bills. But remember, the blueprint's going to keep telling you when it's time to add an additional contract. Okay? So as you walk your way up the ladder, it's time to add number 2, time to add number 3. Well, by the time it says add number 5, those same 2 points that paid you $100 now pay you $500. And when you hit the 10th contract, that's $1,000 a day. Now, there's no guarantee that you're going to make $1,000 a day. What I'm telling you right here is a function of math. If you do trade the S&P 500 E-mini for a 2-point daily goal, and you reach that goal, it will pay you $100 per contract traded. So the 2420 blueprint is called such because it's designed to help a trader go from 1 to 20 contracts over a period of 24 months. Okay, so it's no get-rich-quick scheme, sort of a slow boat to China. But the good news is you might actually get to China this time. No one's ever going to encourage you to trade live until you're ready. And then you're going to always hear us telling you to not trade above your weight class. Okay? If the blueprint says you should be trading 3 and you're trading 6 and 7 and 8, that's a disaster waiting to happen, so don't do it. Okay? That's just for your own good. Okay, look what price did. He gave us a nice 5-point trade, and then it came and got back below the trigger. Triggered a second time. Now the swing high here is 33.83 and a quarter. So 83 minus 67. That's 16 S&P points at $50 a point. That's $800 per contract traded. 16 points. Okay, now if one contract paid $800, think how much 10 contracts would pay. $8,000. Again, that's a function of math. That doesn't even have to have anything to do with our strategy. I'm just telling you, if you're trading 10 contracts and you took this trade and you got in here and got out there, that's the results. Okay, now this is not a woulda, coulda, shoulda kind of show, because everything that we do it right in front of you. In the room in the mornings when Michael's training you, teaching you the methodology and the strategy. You see everything he does, every trade. We don't sweep anything under the carpet. You know, whether it's good, bad, or ugly, it's the truth about trading. And you deserve to have a place where you can actually learn the truth about trading. Finally, once and for all. Actually, we've been here a long time. Now, what does price do? It gets back below the trigger again. What? Yep, it happens. This time we put in a swing high way up at 33.88. Okay. So 88 to 68 would be 20. So that's 21 points. At $50 a point, it's $1,050 per contract traded. So this one was 21 points. Now when I say important prices, important areas are almost always tested, makes a little more sense, right? Now you have an idea of what I'm talking about? That's why when these come out, the Concierge Trade Alerts, hit your Telegram channel or hit the Telegram channel. Get those lines in the sand. The short side was 33.27, which of course was never touched. Now the good doctor has joined us. We had another trigger here, but we would not have taken this one. We had 1, 2, 3 beauties in a row, but we would have walked away from this one. And after we talk to Dr. Tom, I'll explain to you exactly why. Okay, Let me get your mic open, Doc. Okie doke. Dr. Tom, welcome to the show.
Hey, thank you, brother. How you doing?
Doing good. Weather's starting to cool off just a little bit here.
Well, we have two seasons here in Florida, hot and hotter. It never seems to cool off here. But that's why I like to travel sometimes, so I can, put on my overcoat and
Right.
my knit cap with the Marine Corps symbol on the front of it. And, it's just nice to have something, some cooler weather sometimes.
I gotcha.
But
So, did you want me to send you over the screens?
that would be great. I've got some stuff to show you.
Okay.
All right, show
Okay,
my
it should
screen. There it
be
is.
coming your way.
There we go. All right.
Okay. Will Trump return the U.S. to the gold standard?
Right. We talked about that a couple of weeks ago, and I got about halfway through, and then we ended up chatting about some other things last week, which were interesting. But I want to get back to this because it's a really important concept.
Blush.
I'm sorry,
I thought I heard a sneeze somewhere. I said bless you.
just a little cough there.
Oh,
But I don't have the China virus, don't worry. And you can't get it through the telephone anyway, because
well, that's good.
As long as you wear a mask when you're on the telephone with somebody, they can't get it through the telephone wires. I heard one of those idiot doctors the other day recommending that you wear a mask when you're having sex.
I was thinking that very thought. How ridiculous that. How ridiculous that seems. Now I don't think that includes your spouse. It's like if you met this lady at the bar tonight, and it's a casual thing as they call it, which I don't believe in. But anyway, that's when you're supposed to wear the mask. But really, come on.
I see. Or two masks. We won't go any farther than that.
Yeah. Well, did you want to talk about the debate later, after you talk about this?
Yeah, that'd be fine.
Okay. Just curious what your opinion is when we'll do that when you wrap up.
Okay, yeah. Let me run through this, and then because I'm interested in hearing your thoughts. I almost called you after the debates because you're much earlier time zone than I am, but I was pretty tired because we didn't get to watch from the beginning. I was teaching at Bible college, and then we raced home and turned the TV on for the recording, so it was quite late for me when it got done. Anyway, we did talk a little bit about the gold standard, and it's an important subject because if you study economic history, you see that for the first 157 years of our nation's existence, when we were on the gold standard, we didn't have any inflation or deflation or any of the other inflations. We had a good, solid economy. We had the most respected currency on earth. Since we got off the gold standard, where people used to run to the dollar for safety, when there was problems in the world, now they're running to gold. I think I told you a couple of weeks ago, as at the end of last year, only 2% of Americans own physical gold. A lot of people buy gold stocks or gold ETFs. But as far as having your own hot little hand, only 2%. 3 months later, they did a survey after the cities started burning and the the fake demic was going and all the lockdowns and all that. And 12% of Americans at that point own physical gold. So that's a 600% increase in 3 months. And now it's over 1,000% increase, about 20% of Americans. That's pretty amazing, going from 2% to 20%. So that tells you something. That tells you that people are ready for real money. They're sick and tired of the monopoly money, or what I call faith money. You know, you as long as you have faith in it, and the next guy you give it to has faith in it, then it still works. But you've heard of the greater fool theory in the stock market, right?
Guess I'm gonna have to just. Maybe I have, maybe I haven't. I don't, but I can't, I couldn't tell you what it is.
It's an older thing, but you know, the greater fool is, you know, I bought this stock because I was a fool, and because I didn't check it out, didn't check out the fundamentals, you know, whatever. And so now I'm really sorry I did. But to get rid of it, I had to find a greater fool than me to sell it to. Well, that's the way it's going to be with the Federal Reserve, fake money. Talk about fake news. I mean, this is fake money. It's backed by nothing. And even the government admits that on the Treasury website, backed by nothing. But as long as people have faith, then people keep accepting it. But when they stop having faith in it, then it's like having a run on the bank.
You know, I just saw a headline this morning that caught my attention. The dollar slipped against major currencies on Thursday in volatile trading as hopes for U.S. fiscal stimulus cheered investors and spurred them to seek higher yielding but riskier currencies. The Chinese yuan gained the most against the dollar, reaching a year-and-a-half high in the offshore market, as a holiday in China dried up liquidity, exaggerating the moves. In addition, Chinese data on Wednesday showed its economic recovery was on track. Commodity currencies such as the Australian, New Zealand, and Canadian dollars, as well as Norwegian crown, also rose versus the greenback. But I just, what stuck out to me in that particular, you know, the number one performer against the dollar is the Chinese yuan, 1.5 year highs.
Yeah, that's a little scary, frankly, because, you know, their whole goal right now, according to the Chinese finance minister, is to become the world reserve currency. They don't say it that way. They say we want to back our currency with gold. But, you know, what is a reserve currency? It's the currency that the central banks hold as their assets. So right now, over 50% of the currencies held on average in the 200 plus central banks in the world is US dollars. And next is euros. Well, if the Chinese have a currency that's backed by gold, and as I say, they're buying hundreds of tons of gold to accomplish that very purpose, then the central banks will dump dollars, which will cause the dollar to drop dramatically, along with our lifestyles and the purchasing power of the dollar. And the yuan will go up. And it becomes the world reserve currency. It's not something you have to go to the IMF or the World Bank or the UN and petition to become the WRC. It's a function of what they're doing. And so most of the central banks hold yuans, or renminbi is the other name for their currency, then they become the world reserve currency with all the privileges attached to that, and we lose all those privileges. So I've told people about this and say, well, people are never going to do that. They're never going to use the yuan because, it's a communist country and they're dirtbags and they're enemies of America and so on. I said, you'd be surprised. I mean, a few very, very principled people would say, no, I'm not going to use that currency. But the vast majority of people are going to say, look, I got a choice between our currency backed by gold or all the rest of the U.S. Currencies of the world, including the U.S., that are backed by nothing. And they're going to use the yuan. So the only way we save the U.S. is if we return to the gold standard before they do. Because if they get that WRC status, then our economy goes into the toilet big time.
I mean, what would be the mechanics behind such a thing actually happening?
Excellent question, Grasshopper. Excellent question. And you say excellent question, then you just go on and talk about something else and don't answer it.
Oh, okay.
If you don't know the answer. Fortunately, I do know the answer, so I will tell you.
Okay.
Oh, yeah. There's two ways it can happen. A couple of years ago on our Christian Financial Concepts webinars, one of the instructors who's an expert on international economics and particularly an expert on precious metals, he said his title of his webinar was "There Must Be a Crash," and immediately I kind of bowed up at that. As it's in North Carolina, I didn't like that. It didn't sound patriotic. The U.S. dollar has to crash. But as I read through this PowerPoint, I realized he really had a good point. And then, of course, when he taught it, it opened my eyes even more. And I realized that probably the only way we're going to return to sound money in this country is if the dollar crashes. Just like all the forest fires are clearing out, all the underbrush out west, that the environmental people refuse to let the Forest Service burn off safely. Now it's endangering houses and buildings and so on. Well, it's the same kind of thing. If there's a crash, then the dollars are gone, just like all that dry underbrush, and what's left is precious metals. At that point, then the U.S. government has no choice but to return us to the gold standard. And that's the hard way. It could be done the easy way, because there's going to be a lot of pain if the dollar crashes. And most people are not in that 20% by definition. Most people are in the 80% that don't own any gold or silver. And so they're really going to be hurting because all they're going to have is stacks of paper money that no one will give them anything for it. So that's the tough way. The good way is if Trump, who fortunately doesn't care what anybody thinks about him.
Sometimes I kind of wish he did just a little bit.
Well, yeah, me too. But the point is he doesn't. And he doesn't care about the status quo. One reason I would have voted for him to be president, no matter who was running, because he doesn't need to be president. He doesn't need the money. Matter of fact, he donates his salary to charity. Every president we've ever had has gotten rich while they're in the White House, and particularly after they left. Like the Clintons are worth $300 million now. And they were trailer park trash.
That deal that Barry and Michelle cut with Netflix, that's pretty sweet. They'll live well. And God bless them, you know.
But the point is, Trump doesn't have
money. He doesn't need the headache. I mean, my goodness. Here's a guy who can have anything, do anything, go anywhere in the world if he wanted to. He could lay by the pool. He could play golf. I mean, just whatever he wants to do. He has the luxury of being able to do that. But he's chosen, I truly believe, to serve his country.
Public service, a concept that has almost become lost in antiquity. But yeah, exactly. He's not beholden to anybody. There's no billionaires that put him into the White House like happened with Obama. He basically can do what he thinks is right and not have to worry about taking somebody off or them not supporting him or whatever. So that's one of the best things about the man.
Mm-hmm.
But the point is, Wall Street hates gold. They can't make money off it unless you buy gold stocks, which hardly ever perform as well as gold. So they tell people just buy paper, ETFs, miners, whatever, royalty stocks. And that's fine. But when the stock market crashes, it doesn't matter what kind of stock it is. They're all going to go down, including the gold stocks. But if you have physical gold, which again, they can't make money off of, then they have to fight it. So I have clients all the time that are pulling their money out of the stock market to buy gold. And their financial expert guy tells them, oh, gold is just way too risky. Man, you ought to stay in the stock market. Really? The same stock market that dropped 38.4% in 2 weeks in the first quarter. The same gold that for 3,000 years has never lost its purchasing power, never gone to zero. How many thousands of stocks have completely fallen out of bed and went to nothing?
A few.
I used to have to write those no value letters for my clients because they bought penny stocks or just crappy stocks. And so I had to, every year at the end of the year, early January mostly, I was writing hundreds and hundreds of no value letters to people to be able to deduct it from their income tax. So, which is riskier. Anyway, I believe that Trump believes that the gold standard is the way to go. I'll give you some quotes from him in a minute here. But he wouldn't have dared to push for a gold standard during the first term because the Wall Street guys would have rolled out every penny they've got to try and defeat him. They definitely don't want real money, and they don't want people to have real investments. They want it to be all paper. So the best way to do it would be if Trump intentionally moved us toward a gold standard. And it would take several years, but it could be done. You have to be real careful about election times because, you'd be telling people maybe just before a midterm election that they're not going to get free stuff anymore. They're going to have to work for what they get. If you're able-bodied, you're no longer going to sit around playing video games and smoking dope. You're going to get a job or you're not going to eat. And by the way, the Bible actually says that. If a man will not work, he doesn't eat. I have no problem with supporting people who are disabled, elderly people, even if it's their fault. If they didn't plan well, if they didn't do anything for their retirement, I'm not going to let them starve. But these lazy mums that are drawing welfare, and sometimes drawing it from 3 different places. They live in the Northeast Triangle, and they register for welfare in New York, New Jersey, and Pennsylvania or Connecticut. and they just go around and collect welfare. You know, all that's crazy, and we can't sustain it. So if we got rid of a lot of that garbage, then we could go back in a gold standard. But if you calculate all the money that the U.S. has issued, all the trillions and trillions of dollars, and you match it off against the amount of gold that we have, we can only cover a small percentage of it with gold at the current price around 1900. Do you have any idea what gold would have to go to be able to back all the currency we have?
No, tell me.
$42,500
An ounce?
Yeah.
Wow.
And a lot of economists are saying 50 to 80,000. Okay. So right now gold is 1900. Let's call it 2,000.
Mm-hmm.
Instead of 42,005, let's call it 40. Gold would go up 20 times the minute that we went on a gold standard. Now, people tell me, well, you know, the government doesn't have the power to change the price of gold. Of course they do. You know, I mean, what did they do in 1933? They first confiscated 40% of the personal wealth of the nation,
Mm-hmm.
which was in gold. That was the money back then. And then a month later, or a year later, they passed an act, part of which increased the official price of gold from $20 to $37. That's bad enough that they stole Grandpa's gold and gave him monopoly money in exchange. But then to add insult to injury, they raised the price of gold by over 40%. Why not do that first? At least that way they would have gotten more worthless money, you know. But yeah, they just, by an act of Congress, changed the official price of gold. So that can be done. But the people who don't have gold are going to be left out in the cold. Just like when the first U.S. currency, the continental dollar, crashed. The people that only had continental dollars, they were in real trouble. The people that had gold and silver, they were fine. Because gold and silver went up dramatically, just like they will when the dollar crashes this time. So let me just go to the next slide here. Before I forget, to get information on how you can go on the gold standard, whether the government does or not, how you can put your family on the gold standard, is if you go to CFRNgold.com, okay, CFRNgold.com, and there you can request the Gold Education Starter Package. If you want to talk directly to me, feel free. Call the number on the screen there, 561-753-5998. 561-753-5998. And I'll be glad to answer any questions. So, Trump talks about making America great again. How can we do that? Well, we have to make America gold again. We have to have real money. Now, could you use some other commodity?
Oh, that's a good
Sure.
slogan. That's good. I like that.
I think I'll have some red ball caps made up with that on it.
Make America gold again. Yeah.
And have gold letters on it. I think I'll do that.
Yeah. Seriously. That's good.
Let's do it.
You do good work.
So it'll be tough at first, whichever way it happens, by a crash or whether we intentionally return to a gold standard, which obviously is the better way and gives us the best competitive advantage. Because if we wait until the dollar crashes, that could be another year or more. And in the meantime, China could back their money with gold. We desperately need to be the winner in this race, because if we're not the world reserve currency, then we don't have the ideological influence that we have right now. Because we're the strongest economy, we have a lot of influence over the thinking of other countries. China has already been spending tons of money going around to small countries in Africa and South America and, of course, Asia, and buying countries off, giving them money, building them infrastructure, giving them loans and so on. So they're already on their way to increasing their ideological strength. But there's economic strength, there's ideological strength, and then there's military strength. So we don't have anything to worry about, right? Because even if they become the world's leading economic power, we still have the strongest military. The only problem with that argument is that the reason we have the strongest military is because we have the strongest money.
Yeah.
So
Good point.
you see where I'm going with this?
Mm-hmm.
If China becomes the world reserve currency, they can then buy all the nukes and missiles and smart guidance systems and tanks and fighter jets and you name it. And they can actually, it's unthinkable, but we have to think about it, they can actually become the strongest military power. And at that point, the free world is lost. Because China, they seem to have no morals, no moral compass of any kind. Of course, they've been under an atheistic regime for I don't know how many decades,
Right.
7 decades. So there is no morality in the country. It's not just, the people are all nice people, but the government, the Chinese Communist government, they're all mean. I mean, I talked to Chinese people who've moved here, and they say the whole society is pretty much corrupt because everything rolls downhill.
Right.
So the government's corrupt. The government lies. It's okay to lie. The people think it's okay to lie. So just a quick review of what we covered the first time. We discussed the fact that executive orders are not laws. The governors that are putting out all these executive orders are saying, well, you have to obey the law. Sorry, Charlie, just because you said it and signed your name to it, it's not a law. They're enforceable only until they're overturned. And all executive orders can be overturned, whether it's by a president or a governor. They can be overturned by the courts, and they can be overturned by the legislature passing a law. So SCOTUS, the Supreme Court of the United States, says that, yes, executive orders have the force of law. They're not law, but they have the force of law and are enforceable only by the executive branch. They won't be enforced by the judiciary or the legislative branch because of separation of powers. So they can put out an executive order and they can use the executive powers that they have to enforce them. But as soon as they're overturned, that's all gone. But in addition, the Supreme Court says they must be supported by the Constitution, whether from it's a clause called an enumerated power that the Founding Fathers gave specifically to the administrative branch, then they can legitimately write executive orders to further the functioning of that specific power given to them by the Constitution.
Right.
But more often, it's by Congress delegating authority to the executive. People freak out about that. Well, how can Congress tell the president what to do? Well, because that's what the Constitution says. The Congress has to pass a law, and then if the executive wants to do executive orders, basically in the form of rules, it's to further the execution of a law passed by Congress or a specific authority given to it in the Constitution. Well, what FDR did was totally unconstitutional, according to the Constitution and according to the Supreme Court, because there was no law granting him the power to do what he did, to take us off the gold standard, and Congress didn't pass a law and delegate to him the authority to write such executive order. So it's It was totally unconstitutional, and Congress had the power to overturn it right away, but they didn't have the political will. So they let it stand, and then they turned out to like it a lot, because now instead of having money backed by gold, so therefore there's constraints on how much money you can print. Now the government can print all the money it wanted to buy all the votes it wanted to. And so that wasn't just true for FDR, it was also true for all of his little minions into Congress. So they started loving it. So why would it be hard to do it the right way, to pass laws and have this president sign it and so on, to return us to the constitutional gold standard? Because gold and silver are the only constitutional money. It's because the moment we bring back the gold standard, the free money party is over. You realize that half the people in this country pay taxes and support the other half the people.
Right.
It's like my head wants to explode every time I think about it. But the government hands out free stuff all the time to buy votes, and they can do it because they can print all the money they want to. Nobody wants the party to end. Party on. You know, they don't like it when a congressman from one state gets some sweetheart deal for his state, and they say that's not right. But then if it's for their state, then it's perfectly okay.
Party on, dude.
Yep. The government surely doesn't want the party to end. I mean, think about it. Congress used to meet for a few months every other year. They got paid practically nothing. Basically, it was a volunteer position. And they were citizen legislators. Now, they all have these huge fancy offices, and depending on their seniority, they've got a staff of anywhere from 5 to 100 people that work for them, all paid for by us. Nobody leaves Congress without a lifetime pension. Even if you only serve 2 years in the House, you have a pension for life. They get gold-plated health insurance. Every little whim is attended to. So they don't want the party to end. They're having too much fun. The foreign governments don't want the party to end. Even countries like England, which is very strong financially, we give them all kinds of goodies. We throw around foreign aid all over the world. Even if countries don't need it, it's a way of bribing them basically to like us and support us at the UN and so on.
Mm-hmm.
But the most important thing is U.S. voters don't want the party to end. They're going to vote for free money every time because they like free money. That's why we have a republic. That's why our legislators are supposed to do what's constitutional and what's right for the people, even the people are too stupid to realize that it's right for them.
There was a commercial when President Obama was running, and it was a lady, her voice, she said, Obama is going to pay my mortgage and put gas in my car.
Yep.
I heard that soundbite played over and over and over. Now, I think did that have something to do with the Acorn Group?
Yeah, they were supposed to be a nonpartisan group, but registering voters, therefore the government paid them to do that. But then they told the people they had to vote for Obama. But there was even a song came out of that, Obama's going to fix it. Yeah, you know.
I missed that.
And he never paid anybody's mortgage. I'm sure that woman was extremely disappointed, but she had this evangelistic fervor about her. You know, she was just practically crying with joy at his party that he threw for himself after getting elected. Well, the government can't really fix anything. It's the people who are productive, and that's about half of us, and we're supporting the other half. The only part I don't resent is, us supporting the military. The military is not productive. It doesn't produce anything. It doesn't add anything to the economy, but it protects us so that we can add to the economy.
That's right.
All the rest of the people work for the federal government, state government, county governments, town governments. They produce nothing except grief for the people who do produce. And then there's all the people on welfare. There's all the people on various different kinds of scams, the unemployment. Like, I have talked to literally hundreds of people who've told me, well, as long as they're still paying the unemployment, I'll draw it. And then when it cuts off, then I'll go get a job. Part of the requirement for getting unemployment is you're supposed to report in every week.
Yeah, you're supposed to be actively seeking employment.
Right. So what these people do is they just open up the yellow pages and they call, 10 random numbers and say, are you hiring? And 9 out of 10 times they say no.
Nope.
And they write it down.
Mm-hmm.
And then that's what they turn into their counselor.
Yep.
It's bogus.
Mm-hmm.
All of the disability, how many millions of people have filed fake disability claims, and then people follow them around with a camera, after they go get their check, they take off the neck brace and they go out and play racquetball.
Right.
I mean, there's just so many scams going on. So the voter doesn't want the party to end. So why do pork barrel politics govern America? Why are the Democrats trying to pass a $4 trillion supposedly coronavirus bill when the Republicans have laid out in writing how they can accomplish everything that needs to be accomplished for a fourth of that? It's because 3/4 of what the Democrats are holding everybody up for, people that really need the money, businesses that they put out of business or just about killed, that desperately need that money. They're holding it up because they want to get to $4 trillion, because $3 trillion of that is pork. If anybody doesn't know what pork is, it's basically the way people bribe people in their state or their district. They get Air Force bases open in an area where you don't need it. We have Navy bases in the middle of the country where the closest body of water is a small pond. It's crazy. The military, the Pentagon says, okay, each year they put up a list of bases that they no longer need. They no longer serve any useful function. And will save billions of dollars. But immediately, the 2 senators from that state and the dozens of representatives go on an offensive and do everything they can to fight to keep that base open, because it's jobs in their area. Doesn't matter if the people are doing jobs that don't accomplish anything. That's what pork is, folks. It's not the bacon you had this morning.
It's not the other white meat.
Yeah. And so pork politics work because the voters demand it. They want their free stuff. It's like I said earlier, it's only pork if it's for some other state. But if it's for your state, it's, well, we pay our taxes, we deserve it. We have a very twisted view of entitlement in this country. So, as I mentioned at the beginning, Trump disdains the status quo. He likes to shake things up. My friend Lance Wallnau wrote a book about him. I think he wrote this book. Lance is pretty prophetic. I believe he wrote this book before Trump was ever thinking about running, or definitely before he decided to. And it's called The Chaos Candidate. Read it. This was several years before Trump announced that he was going to run.
The chaos candidate. That's
Chaos, CHAOS,
gotcha.
because he shakes things up. All right. The only way you ever get anything done is to shake things up. And if it's always same old, then we're going to get the same old results. So he just doesn't really care whether people like it or not. He's going to do what he thinks is right. He doesn't care what people think about him. I mean, he's probably like all of us. He wants people to like him, but if he does the right thing and people dislike him for it, then I feel the same way. If I do something that's right and it makes people mad at me, well, then that's their problem. It's not my problem. Because if they get upset at me for following the Word of God, for doing what the Constitution says, then I don't really care if they like me. I don't want them for friends. So could this be gold's moment to shine? I mean, gold shines. I've got this coin that came off a Spanish treasure ship, and it was just as bright and shiny after 200 years being underwater as it was when this ship sunk. Gold's amazing in that sense. I guess it's part of its mystique. But I don't love gold, but I really appreciate it because it gives my family financial security. And frankly, guys, whoever's listening, if you don't have at least some gold, there's going to come a time when you will bitterly regret not having gotten some. Because the poorest man in your neighborhood, if he's got even a little bit of gold, will be the richest man, when everything falls apart. So would he really push for the revival of the gold standard to heal America? That's the big question. I mean, originally when I wrote this 3 years ago, I said Trump hints about a return to the gold standard. Today it's a lot more
say,
hints.
in what way has he led us to think that he might be considering such a thing?
Well, let's look at a couple of quotes. Okay. Yeah, we don't know for sure if he's going to put us on the gold standard, but we do know the party can't go on forever because we can't just keep on printing money. When the party ends, it's not going to be pretty. So I was at CPAC when Trump said this, and people were clapping and cheering, but part of it didn't make much sense. He said global cooperation, dealing with other countries, getting along with other countries is good, it's very important. But there is no such thing as a global anthem, a global currency, or a global flag. All that's true except the part about the global currency, because there is one. It's the US dollar. Everybody recognizes that. So what did he mean by that? The dollar is the world reserve currency, acknowledged by every central bank, and yet he said we don't have one. I think he was saying we don't have a real currency. And it can't be a true global currency and last unless it's backed by something. The average lifespan of a paper currency is backed by nothing. Historically, has been 27 years. Are these just hints, or is he telling us that once he's reelected, he's going to actually do it? Well, we don't know if he will actually do it. If he did, we don't know if he'd make it a dramatic return or phase it in. But one thing I've learned with him is never say never. I've heard a lot of people, Trump would never do that, and then he does it. So
Yeah.
he loves gold. If you remember, from 1933 until 1975, under FDR's executive order, it was illegal for Americans to own gold, at least gold bullion. They could buy investment grade gold and they could buy jewelry, but they couldn't buy bullion. But as soon as private ownership of gold was made legal, he aggressively invested. He said that making money with gold is easier than the construction business. Another time he said, these are direct quotes.
He actually said that. Huh?
Oh, yeah. He said, bringing back the gold standard will be hard to do, but boy, would it be wonderful. Okay. The emphasis is mine there, the underlining. But he said that. He said it other times. I quoted this the first week, where he said that we used to have real money when we were on the gold standard. That was another one of the strong hints that he wants to go back. But here's what traditional financial people say about gold. A, gold's old-fashioned.
Right.
B, it's worthless as an investment. C, it doesn't pay dividends. D, banks don't own gold. Well, let's see if any of that's true. A, smart people know that gold is so old-fashioned that the number of Americans who own it has increased 10 times in the last 8 months. That's really old-fashioned, right?
Mm-hmm. Mm-hmm.
Smart people know that it's so worthless that it's the only investment that's never lost all its value. The only one. There hasn't been anything that has had the track record so consistent that for 3,000 years, it's the only investment that has kept pace with inflation. Smart people know that, yeah, gold doesn't pay dividends, but neither do any of the FANG stocks. And yet, almost every American owns them. Whether they know it or not, they own the FANG stocks.
Yeah, through,
That's Facebook,
IRAs,
Apple,
401ks, whatever, yeah.
pension plans,
Pension plans.
you name it. All the government, the TSPs, the 401ks, 403bs. If you put all of these together, G is the last letter in FANG. That's for Google. Its actual official trading name is Alphabet on the stock exchange. But if you put the cap of all 5 of these together, they're bigger than any nation in the world. Actually, I got this word wrong, except the U.S. and China. They're bigger than Japan. So officially, the economies are U.S., China, then Japan. Mm-hmm. But if you put together the capitalization of the FANG stocks, then they're actually bigger than Japan. That's pretty amazing. And yet not one of them pays a dividend.
Interesting.
Let me ask you this. I'm sorry?
Oh, I said that is interesting that none of them pay dividends.
Yeah, and they're hugely overvalued. Let me ask you this. Let's say you really like Carvel ice cream, mm-hmm. and the local Carvel store's up for sale for $1 million, and you're looking at it, and they're grossing $100,000 a month. Would you consider buying it, particularly if it meant free ice cream for life?
Yeah.
Why not?
Why not?
Everybody knows these names, right? Mm-hmm. So they're household names. But what about if the ice cream store actually really started looking into the books? Out of the $100,000 they're grossing, they're only netting $1,000 or a month, or $12,000 a year. Now, are you willing to pay $1 million for that company? Or for that store?
Not so quick. Not so quick, cowboy.
All of these are trading at huge multiples. I believe Amazon's right now is at about 415 times earnings. And yet, people buy them all the time. The problem with this is that the pension funds, the 401ks and so on, because they hold so much of these, that when the stock market starts to slide, these are going to be the first ones they're going to dump because they don't have any dividends because they're so overpriced. So they're going to get rid of the things that are trading at huge multiples of earnings first, which is going to make the stock market crash even more quickly, and which is also going to hurt pension funds and retirement funds and so on, even more. So this is a huge danger. Finally, Wall Street says, well, if gold was good, banks would own them. Well, it makes you kind of wonder where they got their education, because every central bank in the world owns gold.
Mm-hmm.
But still, these financial experts tell you you shouldn't.
Yeah.
Now,
And interestingly enough, the Chinese government has recently been encouraging all of the citizens, all of the Chinese people, to buy gold. Telling the
You're
people to
exactly
go out
right.
and buy gold.
And the reason they're doing that is because that effectively doubles the amount of gold that the government has. Because if FDR felt comfortable stealing gold from U.S. citizens, how bad do you think a Chinese communist dictator would feel? He wouldn't think about it twice. He would say, everybody turn your gold or we'll shoot you in the street, you know?
Yeah.
So by encouraging their people to buy gold, they're increasing the nation's reserves. The biggest coin show in the world used to be in Orlando every year in January, and you'd have like 10 to 12,000 people there for gold coin show, and that was pretty big.
Mm-hmm.
Today, the biggest coin show is in Beijing, and over 250,000 people attend it every year.
Wow.
So they're smarter than we are, guys.
Hmm.
So will he return us to the gold standard, which really is a God standard, because God invented it? Or will citizens demand real money after the dollar crashes? As I said at the beginning, we must beat China. They're working hard to become the WRC. And if they do beat us, it's not that we couldn't then back our money with gold and maybe catch up to them, but they would have such a huge head start and a huge advantage. And remember, they own a quarter of all our foreign held national debt. Of all the 200 countries in the world that own U.S. debt, China has 1/4 of it. And
Wow.
if they dumped all of that on the market at one time, the dollar would drop like a rock, and then we would have a much, much harder time going back to the gold standard. It might even make it impossible. So don't forget that famous commentator, Dr. Tom Barrett, has often said, presidents do in their second terms what they want to do in their first term, but didn't because they knew it would prevent the re-election.
Well, that was well said
think-
by whoever this Barrett fellow is. That's a pretty profound statement.
He's a philosopher.
Is he?
Um,
Bet he's
yeah,
tall,
yeah.
good looking.
Oh, women chase him wherever he goes.
Interesting.
I'll end with a quote. J.P. Morgan, one of the wealthiest people the world has ever seen, and a guy who really knew how to make money, said, gold and silver are money. Everything else is credit. Think that one through, chew on it a little bit.
I will.
Go to CFRNGold.com, folks, and get the Gold Education Starter Package. It could literally, save your family's future.
No obligation, no salesman will call unless you ask, so get on out there. CFRN Gold, one word, CFRNGold.com. Thanks, Dr. Tom.
Well, thank you for allowing me to be here and visit with you, and I'll look forward to talking to you next week.
Really look forward to our Thursdays together. So thank you very much.
Well, thank you, sir. I appreciate that. God bless.
All right, brother. I'll talk to you soon. Oh, hey, you still there?
I am.
Oh, I was just looking here. There was a question, or maybe it's a comment from Joan. First step is to take control of the Federal Reserve, which I believe Trump has done. Put it under the Treasury, right next door to the White House there. Okay, so it was I thought she had a question for you, but it was just more of a comment. Now,
Well, we do have to get rid of the Fed because they actually have taken on themselves so much power that they have more control of the economy than the president and the Congress combined. That's a scary thought because it's not a federal agency. So Joan is right. We have to basically end the Fed. That's a good book, by the way. Ron Paul, one of the only people in Washington that I actually understood money. He wrote a book called End the Fed. I would highly recommend it. And also, if you go to conservativetruth.com and go to my archives, search for an article called The Non-Federal Fed. And it tells the real story of what the Federal Reserve is and how much it's hurt America. Okay?
all right. Thank you so much.
All right, everybody have a great week.
Talk to you real soon. Okay. Now, on the S&P, where we were just doing the recap of last night's Concierge Trade Alert. Okay. Remember, you go to your chart, you draw two lines in the sand. One at 67, one at 27. 27 has not been touched in the session. 67, on the other hand, has been. First trigger was good for 5 points. Got back below the trigger, ran up 16 points. Got back below the trigger, ran up 21 points. Got back below the trigger, but this time things are a little bit different. You see, this indicator here, this red and blue indicator, the technical term is CFMA1. I just call it blue and climbing, red and falling. This represents bullishness or an anticipation of higher prices. This represents bearishness or resistance or potentially lower prices. So when we're on an alert, I just got logged out of my platform. Hang on, let's see if I'm going to get logged back in. Yeah, okay, there we go. Okay, so when we're trading an alert long, we want to, number one, we have to be above the BBC, the green line, bull bear cross, right? Got to be above that to go long. And you want the support of blue and climbing, because that's an indication of higher prices to come. So it runs up $250 per contract traded, 5 points, gets back below the trigger, runs up 16 points, gets back below the trigger, and runs up 21 points. It's back below the trigger, but this time, if you go long here at the trigger, 33.67, you're, number one, you're below the BBC. So over here, you see how we were above, we're below, and remember, once we get below the BBC, we anticipate lower prices. Also, red and falling represents resistance. So you don't want to go long into a brick wall, because this is a beautiful example of what can happen if you do, is what unfolded right here on this chart. Price came down to the weekly trading zone, 3350/3351. Now these weekly trading zones are published every Monday morning at 6:15 a.m. Eastern. We've been publishing them since December 14th of 2009. They serve as a framework. Okay, so first thing Monday morning before Wall Street wakes up, our traders take these zones, put them on the chart, and it shows you fixed support and resistance. And once we publish them for the week, they don't change. They remain the same all week long. So if we scoot back here, if I can get this to cooperate. Come on now. Let me get through this show. Not sure what the problem is. Okay, the 27th was Sunday night. Here's Sunday night, 27th. Okay, we hit the first zone. We consolidate there at 3318/19. And as we work our way through the week, I'm having some real platform issues here. I'm not sure if it's okay. Let me close some stuff down. See if that alleviates the problem. Okay, maybe that'll help get through the show. All right, so the 27th at 1800 hours, it's going to be right there where we had a gap higher open. Okay, so get to the zone, we consolidate. Only three things happen at a weekly trading zone. The most likely thing to happen is consolidation. Okay, second most likely thing is rejection, which is that right there. The third and least likely, but it does happen, it's called the slice. That's when price just slices through a zone like it's not even there. When that happens, price will typically return to the zone it sliced through, then continue in the direction of the slice. But price travels from zone to zone to zone. So when price gets above this zone, as long as it remains above the BBC, then you have every good reason to anticipate that price is going to continue higher till it gets to that zone. When we approach a zone from below, we expect it to be resistance. And it was. It sent price all the way back to the BBC. When price pulls back to the BBC, we expect it to be good support, and it was. It sent us back up to the zone where we consolidated. These are 30-minute candles. Okay, so if you're running a smaller time frame, you'd see a whole cast of candles stretched across there. But the 30-minute is my default go-to chart. Anytime you see me post in the discussion group and Telegram, unless it's otherwise noted, it's always a 30-minute chart. The markets are not moving that quickly. You know, that the fact that it just logged me out of its own accord a minute ago tells you there's something happening on the server side, but I don't think we're going to get through it. It's just not moving. All right, let me do this. I'm going to just log out of that real quick. And log right back in, and hopefully I just heard an odd noise, but I won't concern myself too much with that. There's plenty of other stuff. All right. See, it just logged me out of its own accord and logged me back in. So there's something happening server side. All right, let's see what happens here. Isn't gonna work. All right. So prices come back to the weekly trading zone. It's so aggravating. But hey, gotta make the best of it, right? When price drops to a weekly trading zone, we expect it to be good support. And so far, that's what's happened with this candle. Now, the short side for the S&P is 33.27. So, as I had said, you draw two lines in the sand. This would be the second line in the sand. Oh, come on. I've just jotted down. If price gets below welcome to the world of live radio, folks. Nothing carefully scripted here. Nothing edited. Never mind. Where you would draw a line, let me just tell you, 32. 33.27. Now again, we expect this to be support. We're coming down to a zone. We only have one more weekly trading zone left overhead, and that's up at 3472/3473. All right, so we'll get on to the Dow if the charts will let us. We had one trigger, two trigger, three triggers, one alert. Now remember, these are the concierge. The ones that come out at the beginning of the session as a static report. This doesn't, what I'm showing you right here, this doesn't include all the ones that we just scrolled through. Those are the Logic 247 alerts. All right, it's important to keep those two separate in your mind. Okay. What it comes down to is once you get a handle on our strategy and our methodology and learn the mechanics of just putting on, taking off trades, because it's a global marketplace these days, and the markets are open 23 hours out of the day, there's almost always something to trade. That's called trading on your terms, not the market's terms. Now, this bullish cross that we had right here, support. Think of that as potential support. And so far, between that and the zone, that's what we've got. It's some pretty good support. All right, I'm going to try logging out of this thing, because otherwise I'm just going to have to call it a day. Okay, so my charts will disappear. If it lets me out. There we go, let me out. Okay. All right, let's log back in. See if we get any better results. Definitely must be the server side because it's not even letting me log. Well, yeah, maybe it is. All right, are you going to behave? Hey, it's kind of behaving. Okay, so we're coming down, bouncing. Indicators finally showed up. Now, if price can get through this area of support, we had a little gap yesterday afternoon when the markets reopened. Typically, the only time we see gaps are on Sunday night and in earnings season. That gap has not filled. If price gets below the zone, and that's kind of a big deal. As you can see here, as price moved above the zone and pulled back, look at these huge candles. We spent 1, 2, 3 hours defining this as support, but it was worth the wait because it then handed us 3 very nice trade setups in a row. Now, if we take out this zone, right here is a very nice window of opportunity. We want to get far enough away from the zone because the zone, for lack of a better term, has sort of a magnetic attraction. Okay, so it's not unusual to see a spike a zone and then reverse. Seeing a candle open and close below or above is typically your best indication. But right here, from basically this thing just keeps locking up. $33.43 down to $33.41. So it's a little 2-point trade there, but there's a bigger trade that requires us taking out these lows down here. Okay, and so that's going to make it a little dicey until we get below this swing low, and then there'll be an alert. 33.27 down to 33.19. That'll be a beautiful trade. Now, we, number one, expect this weekly trading zone to provide good support. But over here where the bullish cross took place that led to this magnificent move, that is also going to create good support. Wherever you see a bullish or bearish cross that leads to an extended move, and this was quite extended, you better believe coming back down, that's going to be good support. So watch for that. Okay, let's see if we can get through any of the rest of these. Let's see. Here's the Dow. Okay, come on. last night's alert for the Dow was to be long at 27,775. $27,775. All right, 27,775 took us up to a swing high. Now the initial swing high was 844. So 844 minus 775. 69 points. $5 a points, $345 per contract traded. Okay. Now, over here on the second trigger, we're above the BBC, and this red and falling, we're above that. Okay. And when price gets above red and falling, it is most assuredly going to turn into blue and climbing, as it did right here. And so then when we put in a swing high up at 957, so 957 minus 775, minus 775. All right, that's 182 points at $5 a point. That's $910 per contract traded. Now, if it wasn't such an aggravation, I would extend this line all the way over. Okay, but once this turns right from blue and climbing to red and falling, we've got no desire to get long under those conditions. The short side for the Dow is 27,430. Maybe it would be simpler to just make a little note on the chart for you. $27,430. Okay. Which is roughly right about here. Now, you've got a bullish cross right here. That's going to act, most likely, it's what we anticipate, good support. You just see that play out over and over, again and again. You reach a point where you just don't even question it anymore, because it's how markets work, right? So your window of opportunity will be from here down to that bullish cross. I wonder if it's going to let me draw a little square. Rectangle. Yep. There you go. So from 27,430, down to roughly, you could go 430 to 330. That's a 100-point move at $5 a point. That's $500 per contract traded. Okay, gold. Last night's alert on gold was to be long 40-20. What? That's crude. Let's actually look at gold. All right. Concierge Trade Alert on gold was to be long 1898. Alright. That's 1898 right there. Okey-doke. Now, this initial trigger took us up. Give me my little pop-up. Alright. We had one trigger. Took us up to 1901. It's $300 per contract traded. Came back to the trigger. This time we ran to 1904. So that's $600 per contract traded. Now on this one, we just kept going, right? And then we pulled back to the BBC, and we're still going. And of course, no move on the short side. The short side for gold was down at 1888. Okay. All right. I'm not going to fight with the chart anymore. I'm going to instead do something productive and fix it, if that's possible. I may just be due for a new computer. That just might be the fastest solution. It hasn't been that long since I rebooted either. Alright. Come on. Oh boy. Alright, NQ. Let's do one more. The alert was to be long 11,453, which is right about here. 11,454. Okay. So from 11,453, which was the alert number, as if it had a mind of its own. Bye. 11,453. And from there, we put in a swing high here at 477. So 77 minus 53 is 24 points at $20 a point. It's $480 per contract traded. Price then got back below the trigger. Important prices, important areas, almost always tested. And from 11,453, put in a swing high up at 595. So 595 minus 453 is 142 points at $20 a point. It's $2,840 per contract traded. That's a $3,000 per contract move. Now the exit signal showed up right here. You see, it's very difficult to get out at a swing high or a swing low because you don't know it is such a thing until after the fact. So what are you going to do? Well, this little step line, when it crosses over, blue and climbing, on a long trade, the first red candle that closes below the step line, in this case, that closing price was 11,557. $11,557. So if we do the math that way, 11,557 minus 11,453, that's 104 points at $20 a point. It's $2,000 per contract traded. Now, that's from this entry, the published entry price, right there, to the exit signal. That's where the chart is telling you this move's running out of steam. You may want to consider stepping aside. Okay, we pulled back to the BBC. We did find support. We've now gotten above red and falling, and we've got some pretty jagged action going on right there. So that's gonna do it. Wasn't that much today, but man, it wore me out. It's so aggravating when the charts just reboot and get under the hood and try to fix it one more time. We'll close out with our good word for the day. Tomorrow's Friday. Yay. So, what should we expect on life's journey? Hebrews 11:8 says he went out not knowing where he was going. How many times? Hey, Daddy, over there yet? Hey, Daddy, over there yet? I don't know. Why don't you know? Because I don't know where we're going. Got to have a plan. Okay? And you got to be able to follow the plan. So many traders out there today, they don't have a plan. What do you mean plan? I mean, I want to be a trader. I want to make money. Okay. Well, you got to have a plan. Okay. Would you try to build a house without a plan? We've seen some of the fine work that the early architects of our civilization built. Pretty amazing, considering they probably didn't have blueprints. But you get the idea. The Bible tells us, by faith, Abraham obeyed when he was called to go out to the place which he would receive as an inheritance. And he went out, not knowing where he was going. For the next few days, let's look at some things you should expect on your life's journey. We all have a journey. In the world of trading, you hear me talk about the journey up Trader Mountain. We're all at different spots on that journey up Trader Mountain. But in all areas of your life, where are you on life's journey? Number one, opportunities and opposition. Paul wrote in 1 Corinthians 16:9, a great and effective door has opened to me, and there are many adversaries. Indeed, if you don't encounter obstacles and opposition, you should pray and ask God if you're on the right track. The size of your God-given assignment usually determines the magnitude of the attack. But wait, there's good news. No, really. There is good news. Attack is a sign of respect. What? Not in the neighborhood I grew up in. But hear me out. It means the enemy considers you a high-value target. Why? Because you're a threat to his plans. Well, when I came forward and said I wanted to be a Christian, I didn't realize that I was turning myself into a target. Number 2, setbacks meant to derail you. A righteous man may fall 7 times and rise again. Proverbs 24:16. Who is Solomon describing? A righteous man. How often does he fall and get back up? Well, the Bible says 7 times. Failing doesn't make you a failure, but giving up does. Not learning from it does. Refusing to change your methods does. Refusing to take advice, refusing to try again, that makes you a failure, not failing. If sin caused you to stumble, repent and renounce it, then get back on track. If you fail because you're trying something new and unfamiliar, don't beat yourself up. Instead, draw on God's grace, resolve to do better, and keep moving forward. To quote Dr. John Maxwell, fail early, fail often, and always fail forward. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.